Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, we have told you about global setup. We told you how trade setup. We also listed the stocks. Now let's get in some fundamental analysis. Siddhartha Khemka, the head retail research at Motilal Oswal Financial Services, joins in. Hi, Sid. Morning. Hope you're having a good Friday morning. Well, plenty of stocks to discuss, right? Let's talk about Paytm. You have some positive news flow that we saw overnight. What's your view on the stock?
Yeah, very good morning, Nigel, and happy Friday to be in, especially after the recovery that we saw in the markets. Else, we would have been going into a Friday with a somber note, but leaving that apart. So yes, Paytm finally managed to get that NCPI approval for being a service provider, standalone service provider for the UPI payments. So that is positive, definitely coming in the last day, 15th, which was the extended deadline set by RBI. So it's a positive news. Now the company has to focus over the next 2 quarters in setting up the operational setup, transforming from a bank-backed payments gateway to an independent payments gateway. We already know that now they have got 4 banks banking them. They have already seen a lot of churn in terms of merchants, users, 15-20% have already moved away. So those things will be the focus of the management in the near term. But I think somewhere this news was kind of a little bit factored in. So we definitely will see a positive reaction to this news today in Paytm. But as I said, the crucial thing would be for the company to stabilize the remaining businesses over the next 2 quarters. Stock price has reacted very sharply to the developments in the last few months, and I think at these levels, if things starts improving, one definitely it should be positive going forward for Paytm. At this moment, we still have a kind of a neutral rating. We will kind of put it in the watch list to see how things improve over the next 2 quarters to have a you can say concrete view on the stock.
Got it. Okay, so this is positive news flow coming through, but you'd want to wait a bit to see some more concrete positive news before taking a call. The other thing is the fuel price cut, right? OMCs could be under pressure today. The government has cut petrol and diesel prices by 2 rupees a litre. Some brokerages are saying that although this is a sentiment negative for them, the long-term view on OMCs is positive. How are you approaching this space now?
Yeah, Sonia, good morning. So I think there's a mixed view coming in with the 2 rupees cut. So a lot of street was expecting about 5 rupees or higher than the 2 rupees. So it's definitely a relief in that sense. But a 2 rupees cut would impact the marketing margins currently about 5.5 rupees. What we had factored in was about 3.5 to 3.8 rupees per litre. For the petrol, but diesel, I think it will go down and it will be remaining at the break-even point. The key question here is, will this price cut be for 1 quarter? Then the impact will be much lesser. But if it continues for a longer period, I think then FY25 numbers will definitely get a hit, especially for someone like an HPCL, which has the largest marketing network and the business, followed by BPCL. IOC, which has a much larger refining business, is the least impacted among them. Overall, as I said, the other risk that is there in the current environment is the crude oil prices, which are inching up because what is happening in the Red Sea, what is happening with the US, China. I think that is a bigger risk. If that continues to remain elevated, then the marketing margins could really come under pressure and the view changes for the OMCs. But I think overall, as you said rightly, yes, we definitely have a positive long-term view on the oil marketing companies. Any sharp correction on back of this news would be an opportunity for the long-term investors to pick up stocks. So while we like Indian Oil followed by HPCL, I think these are some of the oil marketing companies that one can look at. But in this current scenario, if oil prices continues to remain high and the price cut, I think in the near term, if someone is looking at the overall oil and gas space, I think we would prefer a GAIL in the current environment from a short-term perspective as well as from a long-term, but opportunities in correction to add to the oil marketing companies.
So Sid, in this fall that we've seen, yesterday we saw a decent bounce. Have you guys sort of come out with the list of sort of your top conviction ideas where prices have fallen more than warranted? I mean, just based on the price correction we've seen, where you have coverage, I mean, any names you can suggest?
Yeah, so Prashant, while the correction has been more in the broader market, and we have been suggesting a lot of focus to shift towards large caps, but we definitely have been looking at some of the stocks which we like among the list. If you look at, especially from the broader market, something like a PNB from the PSU banking space that we have been liking for a while now, and has seen a correction. BL from the defense space. Zomato is something that we have been liking from the new age digital as well as your e-commerce space, and may not have corrected that much, but that is something again that we are liking. So these are some of the names that we like. Also, if you look at some of the other mid caps that we have been consistently liking, Varun Beverages is another name that comes up in our top recommended list every time we see the market being volatile. The company has seen a strong journey of growth, as well as in the recent strategic advances where the company has gone global with some of its acquisitions. We believe that the growth momentum for a company like Varun Beverages would continue. We are expecting a revenue growth of upwards of 20% in terms of revenue, and in terms of net profit about 28% over the next 2-3 years. And despite the higher valuations, we believe that the company could continue to do well on back of the newly launched products, increased penetration of the newer territories in India as well as in Africa, and expansion in capacities and distribution reach. So overall, we like the stock. Varun Beverages, we have a target of 1600, and we believe that could be a kind of a consistent compounder kind of a stock in this market.